Good evening, everybody. Thanks for joining the session, and we're going to start right away. Our speaker is on the call, Rick Capital. I'm sending you the mic. Kindly accept, and we'll wait for every other person to join in on the session. So let's say we'll start 7:05 immediately, and that's about 8:05 West African time. Okay, so let's just give a bit of time for those who are yet to join. I'm just sharing to share the link so others can join. So once again, good evening, everybody. Rick, I think you can request for mic. I've sent invite, but I don't know. Just tap on the mic and request so I can accept. Rick Capta, can you hear me? If you guys can hear me, kindly indicate with an emoji. Can you guys hear me loud and clear? Indicate with an emoji if you can hear me loud and clear. Please, if you can hear me, indicate with an emoji. Please, if you can hear me, indicate. Okay, thank you. Rick, I'm trying to send you invite to speak, but I'm still waiting for you to accept. Okay, I'm still waiting for you to accept so that I can start the session right away. Thanks again to everybody who joined. We're still waiting. I think it's on now. Okay, Rick has accepted. We'll soon start the session. A minute, please. We'll be starting the session very soon. So we have like 1 more minute to get every other person who are not on the call yet to join in, and then we'll start. So, and there's something about me. I don't like keeping people waiting, and I want us to utilize the time we have. So, as always, join early. It saves us time and all that. I do have some questions, but I think before we look at this question, we'll talk about a bit of history because not everybody on Twitter has actually seen or heard from Rick. Most persons, Rick is a new person that are just hearing about for the first time. I think majority know the other Rick, the one that works with Kojo, but this is Rick of Nigeria. The other guy is from Ghana, all right? And Rick is a very good friend of mine. I think I'll try and recap how we actually met. Um, it was on Instagram, I do remember, but as always, we'll hear from his side first. And I think the first thing I want us to do is have a bit of history, how he started trading, what brought him into trading, and the possibilities he saw that trading could offer for him to say, you know what, this is something I want to just take my time to do, rather than do a 9 to 5 kind of work or do million works or entrepreneurial skills and all that. Why not focus on trading the financial market? And in the long run, though it's going to take time to build that edge, but yes, you understand that when you get this edge, it's going to profit you in the long run. All right. So first off, I want Rick to introduce himself, give us a bit of experience, how he started, what brought him into trading, how long he has been trading, and what. Before we look at the questions, what is his best approach in markets, and then the favorite trading pair he trades literally every time. And so over to you, Rick. Can you hear me? Good evening.
Yeah, I can hear you.
What's good?
Can you
Yeah,
hear
I can
me?
hear you. I can hear you loud and clear. Did you get the question I said?
Yeah,
Okay.
I think I
Okay.
did.
So go on.
Hello, everyone. Good evening. Nice to meet every one of you. My name is Derrick, but short form is Rick. Anyway, um, I am a trader. I'm a gold trader. I've been trading for going to 5 years now. I love to trade gold. I've been trading gold for that same amount of time. Gold's probably been the only thing I've actually focused on from the beginning of my career, anyways. And yeah, I think that basically sums up Rick.
Okay, so what actually brought you into forex trading?
So I met the guy, and it was through network marketing at that time. The guy was a network marketer, under the umbrella of a forex trader and all that kind of stuff. So he wanted me to join this service then that was called iMarkets Live, and the whole project then just looked so nice. And of course, I was just fresh out of school. I wanted to make money, and I felt like it was something that I could, go into. It's not like I knew anything about trading or anything. What that guy sold to me mainly was the whole marketing aspect of the trading side. I got into the company, and in a month, I kind of already knew what I wanted to do. So after a month, I just quit whatever it was about the marketing shit and just focused on trading. And to today, I've been trading. Yeah. So that's how I got into it.
Okay, I think a majority of us actually came across IML, iMarket Live, and it was quite funny then because I also came across them and I just refused to join because I knew that majority of them were just marketers. But that's not what we're here for. So we want to look at the topic establishing a trading edge. Now Rick has been trading for 5 years, so he has built experience over the years. Now there's some things he probably started with that he's no longer utilizing, and then there's some things he came across that he modified. And so this is all part of what experience. No matter how lucky you get when it comes to trading, experience is what's going to keep you long in the game, right? So if you're somebody that over space of 2 months you have made crazy amount of money, now the remaining months will determine if you'll be able to repeat that same percentage. All right. Now the first major question I want to ask, because we're going fully into strategy and all that. The question is, how do you actually identify and analyze the market trend to gain a trading edge? Now, we just don't want to hear from just a technical perspective. We want like a breakdown of how do you actually identify and know that, okay, yes, this edge I'm using or this strategy I'm using, in the long run, I'm going to build my edge, right? So let me read the question again. How do you identify and analyze market trends to gain a trading edge?
Okay. So it sounds like a technical question, though, right?
It does. Yes, it does. But
Um.
then you could always bring in the approach in which you make use of. Because literally, we can't really understand if you start going technical, but
Yeah.
there's a way you can mix it up that gives a brief understanding of it.
Okay. So how do I come to a point where I can identify market trends? Um. I think that answer is, like I said, is technical, and the reason why I'm saying it's technical because my answer is actually going to be technical in the sense that I'm going to start calling and naming some technical terms, and immediately I start jumping into technical things. It's not going to be able for me to kind of explain it with just words, but with charts, it's easier because I feel like nobody might really understand it when I just say it out. Um, but yeah, looking at price, raw price, because I'm a chart guy. I like raw price and on the charts. So looking at the charts, how I identify trends is basically understanding how a trend started and how a trend ended. I think that is one of the most important things for me. I always like to know the beginning and the end of a directional movement. So if price goes up, I want to know how did it begin before price started to go up, and I want to know how the price end when it went to its highest point. The moment I do that, and the moment I'm able to find that or use that approach, then I'm able to understand the direction of the trend, and that also gives you the trend basically. So yeah, I think that's the way I can explain it, is by looking for the beginning and the end of a specific long-term move.
Okay. Okay, that's good. So now let's move to the next one. So this question is something I have noticed. I don't think I've seen you utilize this, but always wanted to ask this a personal question. When it comes to trading, Do you actually trade fundamentals? Because I don't really see you say, okay,
Yeah.
you actually trade fundamentals.
No, so here's the thing about fundamentals with me. Um, I personally only use the time of whenever the news is going to drop. I don't care about whatever is going to happen in the news. None of my business. Bearish, bullish, really none of my business because like I said, I'm a chart person. Everything I do has to do with the charts. So how I look at news events or fundamental economics, whatever. For me, it's just when is it going to drop? At what time? Time is what's key for me with the news events. At what time is NFP happening? At what time is the CPI happening? Or at what time is the interest rate happening? The time for me is what's key. And most times, it actually doesn't even matter at the time because my trade is independent of any external factor. All my trades are independent of external factors. I don't win because of any external factor. I don't base my winning trades because of one news happened or this news happened or one fundamental thing happened or whatever. I also use the limit approach. So it's not like I take market execution trades. I've never taken a market execution trade. I don't take a buy by market or sell by market. No, my trades are already pre-planned 2 days, 1 week, 2 weeks before it happens. So when the entry actually gets activated, the news or whatever happens already just becomes irrelevant in that way because of how I trade. So is it that just going to make me money faster or make me lose faster? That's just how I see news.
Okay, I think I do say that same thing. That last part. Uh, One thing about news is either you're going to hit your take profit in a very fast amount of time, or you're going to be out of the trade fast, right?
Yeah.
So, but
Yeah.
I also discovered news doesn't really change the trend actually. But if you're entering the market on the news time, that's when most people take losses, right? Because if you're actually on the you had a position way before news, like hours before news, right? You notice that you could decide to close your trade totally or just still let it run. Because if you're on the right side of the market, it will go in your direction. Now, there are cases even when, because I'm a very strong person when it comes to fundamental. I'm a fundamentalist also. There are cases whereby even if the news comes out in favor of dollar, not every time will dollar buy. The case dollar will still sell even though the news came out positive for dollar, right? So that tells you that trend itself is very important, especially when you're trying to integrate fundamental analysis or macroeconomics with technical part of trading, right? In the long run, for me, fundamental is actually very, very important. It gives you direction, it gives you volatility, right? But if the market is already building up for a buy or building up for a sell, it won't really, really change it. Worst case you can say is it can act as a corrective move, market sharply shoot up to mitigate a level and continue down, or shoot down, mitigate a level and continue up. That's how I do say it. So now, what role does technical analysis play in establishing a trading edge? The reason for that question is because sometimes your trading edge is not built fully on technical, right? Recently, most people have been saying my psychology is this and that, and I keep telling them I don't have anything to do with psychology. In trading, there's no psychology for me because I believe if you are not ready to lose, you shouldn't even start. So you accepting that you can lose, and even though you lose, there's this quote. I forgot who said it. It said it's not about how many times I lose. It's about how much I make when I'm right. So it's not about how many times I'm wrong. It's how much I make when I'm right. So even if you lose a lot of times, the times you are right, the money you're making should cover those losses and still give you profit. So what role does technical analysis play in establishing a trading edge, and how do you incorporate it into your strategy?
For me personally, technical analysis plays a very, very huge role. In fact, technical analysis plays almost 90, if not 100% of my trading, to be honest. And I'll tell you why. Technical analysis is almost 100% of my trading. Why? Because of how I trade. The way My personally, the way my technical analysis is in such a way that I tend to want to read the mind of the market. I'm not yet to be an average trader. First of all, I was not born to be ordinary. I was born to be extraordinary. So because I understand that fact, I also equally understand the kind of power that I wield, and I understand the power of my mind, and I'm grateful that my mind has been able to take me to places where I can be able to say, okay, I understand and understand the market's mind, if that makes sense. And that's why for me, technical analysis is almost everything, because over the course of my career, I have always taken technical analysis very, very seriously, because I've early in my first year, I could already see the potential and the power of having the right thing, of having the right thing that can give you consistency. And I believed from the very beginning that if I could find that thing, then I know that I can unlock a lot of many other things. Tech analysis is 100% of everything I do. Why? Because when it came to failure, when it came to, like you said, psychology, when it came to building a good psychology, I owed I owe everything to the system. I owe everything to technical analysis, because from my failures I could learn and understand myself because of technical analysis. I could see loopholes. I could see the reasons why I made mistakes over time. I could learn a lot about myself because of technical analysis. Technical analysis is the only thing that makes me take action. So that's why I would say it is almost everything to me, if not everything to me, because without it, I can't make a single dime of money. So if I'm actually being very honest, tech analysis is 100% my all. I owe everything tech analysis, because it is what has shaped everything about my trading and everything. In fact, the end product, which is money, I would not have gotten it without my tech analysis. So to me, tech analysis is almost everything.
Okay, so would you say that's 100%? Because you said
Yes,
almost
actually, I
everything,
would say
meaning
100%, to be honest. For me,
100%.
it's 100%. I don't joke with it.
That's interesting because if you ask random persons those questions, the first thing you hear is uh, my technical analysis, my psychology. I need to be in the right frame of mind. There was a joke we're making. We're on the space, and then some of the speakers were talking about how they joined the Twitter space, and then they were telling them, let's build your psychology. Take a deep breath, breathe out, breathe
Yeah,
in. I'm like, really, really
that's all bullshit, really, because the truth
bullshit,
of the
guy.
matter is that, see, how are you going to make money from trading if you didn't get your entry from applying the right methodology? That's the only way we make money as traders. So it's like when somebody tells me tech analysis is this percent, or it's like, then what do you do in the other times? Do you gamble? Do you know? So to me, that's why I feel like tech analysis is 100%. Everything I do and everything I've had and everything I've made, I owe it to tech analysis.
Okay, that's interesting. So moving on, because questions will keep coming. But those who are listening, a quick reminder: the space is proudly sponsored by Good Funded Trader, a proprietary trading firm, and I want you guys to ask your question in the comments if you do have question for Derrick, or rather Rick Capital. And one thing I want you guys to also know before I look at this third question, there's another personal question. Now you said something. From what you said, I picked this. You said when you started trading, because me, I also remember when I started trading, the first pair I traded ever in the forex market was silver and gold, right? So there's a reason why I give silver a break because of the volatility of that pair, and then how crazy it is, and how I can't really understand the pip calculation. Okay, so my question to you is this: how did you come to realization that gold is the pair for me, right? Somebody asked me a question this afternoon, and I think I might ask it back to you. The person said, did you choose gold or gold chose you? Because I also trade gold. Now, my question back to you is, how did you come to realization that gold is the right pair for you?
Um. Okay, so the first pair I actually ever traded was gold. I remember very well. I don't even know. I think the person, the guy who brought me into the IML stuff, the first pair he used to teach me about support and resistance, and he used gold. So it was one of the reasons, and I took it and I started practicing with it. So I think from that, that's what started it. I think if he probably used another pair to teach me, I probably would have gone another direction. But because he used that, and because I started on that, and then I started to go deeper into it, and I found out that gold moved exactly how I personally wanted it to move. It was different from every other pair. Anytime I traded any other pair, I always had a different result. I always had a different. I always felt more confident when I was trading gold than any other thing. I always felt like I knew what I was doing. I always felt like I understood it better. So I would say that I chose it because of the signs that I saw from the beginning. That this thing does it differently. It does it like this, like this. So I could start to see the uniqueness, and then I think that's why I chose it. I would not say it chose me, of course. I would say I chose it.
Okay. And over the years, when I first started talking with you, I think that was it 2021 we started talking.
Yeah, I think so.
Okay. When I saw the trade you took that you had for
Yeah,
6 months, right? And I was like, I also had that trade, but mine was for 5 months. And then how we started talking from your entry, because I've noticed you have this risk appetite. So that's what is bringing the next question. Your risk appetite is very, very low. Now, there was a time I was asking before you posted that account whereby you said 84,000 in profit.
yeah.
I was not like, I always wanted to ask that question. Why do you choose to risk 0.25? Only for me to get answered by the time I saw the capital. I'm not like, okay, because of the capital. Now, the question is, how do you assess and manage risk effectively to maintain a sustainable trading edge?
Okay, so some most of these things, the reason why I use 0.25, for example, is not by my doing, first of all. It is by the system's doing, it's by the technical analysis doing, it's by my system doing. So it's like my system tells me, oh, when it's like this, use 0.25, or when it's like this, use 0.5. I only have two risk um profiles that I use. So it's either I use 0.25 or zero point 0.5, and it's because of it's the system that tells me when to use it. So beginning the January, we started a new year, right? And I decided that okay, because it's a new year, I don't want to start big, of course, because we're starting on a fresh slate. So I decided that okay, my first trades from the first month will be less. Then as we can keep on going on, there are also cases where the signal tells me, oh, this place is a, it's like over time, this is a risk, that kind of thing. So oftentimes it's not just me saying, oh, I'm going to risk less. It's actually the system guiding me to, risk 0.25 here or risk zero point 0.5 here. So that's like how I do it. The crazy thing is the 0.25 trade I took, I was meant to use zero point 0.5. The system said I should use zero point 0.5, but I went lower just because, we're starting a new month and I'm just trying to start, not go too big in the beginning, but just take it easy, then I can build from there gradually. I don't know if that makes sense. Can you hear me? Yeah.
Okay. So now the question is this: how does the system tell you the risk to use?
Okay, so with my system, there are. Sorry.
Your dog is just being aggressive. I think Mr. Rick's dog decided to chase somebody this evening. So he has to ensure the person is safe before he comes back. But anyways,
Yeah.
for those who are
So
listening,
sorry about that.
okay,
My dog.
go on,
Okay.
go on.
So um, so it's like this. If I'm trading the direction of the trend, that's continuing the trend. So if I can need to keep on selling, and the trend is bearish, then I can increase my risk. But if I am trading against the trend, I can reduce my risk. So these are like some factors that determine okay, when do I reduce the risk, when do I increase the risk.
Okay, so basically, if maybe you are edging, you're trying to edge, you reduce the risk.
Yeah.
Okay. So the final question. because as always, I try to keep the space short so that those who come back to listen again, they actually get the value they're looking for, and there's no a lot of stories. The final question is, in what ways do you, because okay, I think this relates to the question I asked earlier on. It's still based on fundamental analysis, but you said you already answered it when you referenced
Okay.
timing, right?
Yeah.
Now, this last question is something I said, you know what? I don't believe in this. I'm not going to put the first part. So I'm just going to ask the other part. Can you share insights on how you stay disciplined, and how does discipline also contribute to maintaining a consistent trading edge over time?
Okay. Um, Discipline is like a subject I personally I'm not sure if I even understand what discipline is. Um,
If you look at it this way, do you know how hard it is to say, you know what? I've not seen my system. I won't trade. There are traders
oh,
who can't stay off
okay,
trading.
okay,
Do you get it? In that regard?
okay. I think when it comes to discipline, has started way back, like 4 years ago for me. Discipline is not a today thing or something I do every day. Discipline was already embedded into 4 years back before during the time when I said, you know what, I'm going to be dedicated to this, I'm going to be serious with this, and I'm going to make this my all. I think at that time was when I became disciplined. And so now at this stage in my career, I no longer start to think, oh, am I going to stay disciplined or am I not going to stay disciplined? The discipline has already been there from the beginning, knowing that I have to do the right thing. And I think because I know that if I don't do the right thing, then obviously I'm going to get the wrong result. So it's like plus and minus. I know what I need to do, and I know that if I don't do what I need to do, then of course I'll find myself in phases where I fail or in phases where I'm in regret. And I've already done this over and over again, and I understand that there's really no need to go the wrong way. Instead, it's just going to make my career longer. It's just going to make the goals that I try to achieve longer. It's just going to make my journey longer. So it's like I've already told myself way back that you know let's just get this thing serious. And because of that, the discipline was already been embedded in me that I don't even have to think about it. I already live it because it's already deeply rooted right from the beginning, right from when I made the conscious decision to make this everything.
Okay. That's a well thought out answer. And another thing I want to chip in, guys, is that in trading, I think the most important thing I've come to realize is risk, right? Risk is the most important thing. Forget about every other thing you hear. Even with a bad technical approach, right? For those who are making use of the basic chart patterns and all that, you can still be profitable only depending on your risk. Now, sometimes this greed comes in, and then you start fighting it, and then you are unable to deal with it. But I want you to understand that if you're actually very, very disciplined, and you try to do what you're supposed to do. The another thing in trading is, don't if trading is like your only means of income, and then you spend too much time on chart trying to look for trade, you are going to start seeing what's not there. One of the hardest thing is staying off chart, but it's quite needed. From what Rick have said so far, if you listen, you will hear that it has two type of risk: 0.25 and zero point 0.5. Now, the first time I saw that, I'm like, if you make a 10-hour setup, that's basically 10 divided by 4, right? In terms
Yeah.
of percentage, and that you making 2.5. So imagine somebody is risking 0.25 and it's making 2.5. Then somebody else is like, ah, that's too small. And that's what is the problem. That's like the problem with Nigerians, greed, right? The moment you hear, oh, how can you be making 3% a month? That's too small, this and that. It tells you that these guys are in a hurry to make it big, and that's why they lose a lot of money. Trading takes time, profitability takes longer time, but if you bring in risk management and discipline, staying off chart when the market is not clear, just like this January, right? This January was a negative month for me because I was like, you know what? let me try and see if I can get some trades. And I was just taking losses, 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 losses. But then again, what keeps me in the game is that risk. If I have a capital, I understand that risk management is what is going to protect my capital. If you check what I posted to the Jobotron, it talks about managing your risk and capital protection, right? If I'm protecting my capital, I can trade the following month, the month after that, the month after that again, right? But if I'm blowing everything off, you know what? I just want to make it big. Now, there's this problem also where somebody takes 6 trades and you won all 6 trades, and you believe because you have won all trades your next trade you're going to win it, and then you do what, you triple your risk or you increase your risk like by a lot, and then you expect the same result from the past 6 trades you have taken. So in everything you do, understand that discipline, risk management is important. All right. So I want us to hear the final advice. Let's put it this way. What's your advice to those who just want to start trading? One. And what's your advice to those who have been trading but yet still not consistent or profitable? What do you think they are doing wrong that they need to start changing before they start seeing that effect of profitability in their trading journey?
Okay. Um, I'd say for beginners, the first thing you want to do as a beginner is to stick to one pair first of all. You know, of course, I think I also understand. I actually get it why, especially forex traders, because there's a difference. There, there's something that I think we need to first of all understand. There's a forex trader, and then there's a commodity trader, and then there's different kind of traders. But we are all traders. But we are not all the kind. All we're not all the same type of traders. So I trade gold and you trade EU doesn't mean that we are the same type of trader. And also, somebody who's trading crypto and me trading gold doesn't also mean we're the same type of trader, but we are traders. So I think one of the reasons why, especially forex traders, now this is me talking about forex traders, one of the reasons why it's very difficult to stick to one pair, especially if you're trading forex currencies, is because of how slow they are to produce, for example, 300 to 400 to 500 pips. So I'll give you a perspective of gold and how I trade gold. So, for example, gold can give me 450 to 500 pips in a week, and that trade could be my trade of the week or even for the month, and I could make 5 to 10% that month, sometimes even much more. It all depends on the risk I use. If I use zero point 0.5, it will be bigger. If I use 0.25, it will be good enough, basically. I'm likely hit the 5% mark, literally, because in the first place, my risk to reward trade, the trade before I take a trade, my risk to reward has to be more than 10%. So that's even the first criteria. So because of the volatility of these pairs, they're so different and they vary. It is one of the reasons why you can't stick to one, because one doesn't give you enough. And so I get it. And when I meet forex traders, I always advise them that, see, if you really, really want to, in your old age, if you actually want to still be trading, if in your 40s, if in your 50s, you still want to be trading and you still want to be enjoying yourself. Because for me, I enjoy trading, and you still want to have that energy to keep on going into the game. You should find something that gives you much money in a very short amount of time. Um, Also, another thing that I noticed, which people don't tell the forex traders, is the truth about risk management, is the fact that because it is very difficult to get a good amount of volatility, especially when it comes to risk to reward. Let's use Euro USD for example. Um, of course, I think you can find maybe 20 pips to 200 pips, and that's a 1 to 10, or maybe you find a 15 pips stop loss to, let's say, 150 pips, which sometimes happens maybe in a month, sometimes you don't. And for me, those big moves of the month are my moves because they give me the most money with the least effort. I just need to set a limit, sit back and wait, and I'll make the most money because I make the most move for that month. And so if I apply it to every other person who's trading forex, I can see how very difficult it will be and how it will take you even much, much longer time to even make money. And because of these reasons, sometimes I don't even know how to advise forex people. because that's why you end up seeing they are the ones that gamble the most, because you have to put more risk because of that short movement that you're going to get. And already by doing so, you're putting yourself in a place where you would not like the return in the long run. And I'm saying this mathematically, and I'm also looking at the long term perspective. So I'd say that if you're looking forward to trading and you want to get it right, especially in this day and age, leave forex pairs and go into volatile, a lot more volatile pairs that you can learn from, and then they would give you more money in short time, rather than where you be trying to overdo things and try to be like a gambler, because it's going to push you to become a gambler actually, instead of getting to that point where you're now gambling. Because I can tell you that most forex traders gamble because of the reward that forex currencies give, and that's why it puts them in a very, very crazy ass spot. So gold is something that is very minimal for everybody. I'm not talking about US 30 or every other thing else, but when you come to the gold market, if you can open your eyes, especially as a beginner, you've not gone far. So if you can open your eyes, especially at a very early stage, and look into gold very well, I promise you that you would, the amount of time it would take you to get to that profitability will be a lot much quicker than it would chasing forex pairs. Now that's one thing I would say is an unpopular opinion, a small opinion, and a small advice. And I think because this will help you also understand risk management correctly, and it will take you away from being a gambler, and that will give you a very, very healthy long-term growth in the game. And I think that's for me pretty much all I have to say.
Yeah, that's a lot of advice, and I do hear a lot of new beginners when they come into trading. They run from gold. You hear things like it's too volatile. In my mind, I'm like, guy, that's why I even love it, because if you are wrong, you are wrong fast. If you are right, you are right fast. And when it's moving, you enjoy it. You can't be right all the time, but when you're right, you should also enjoy it. And
The
I
thing
think
is,
then,
gold does so many things. I'll tell you the truth. Gold does things that it price is meant to do correctly than any other pair would.
yes, 100%. And another pair will tell you that almost do the same thing. It's just that now that pair is useless. In 2020, 2021, after I started trading silver and gold, the only currency pair I really liked that I added was GBP JPY. GBP
Yeah,
JPY in a day would do 300 pips. I
yeah,
was like,
that's the second
fuck.
pair. That used to be like my substitute. I still even look at it today.
But now, no, right now, the volatility of that pair have actually reduced. 2021, GJ can run up doing London. London, I always waited for London session, right? Before London opens and you are in on your trade, either buys or sells. Once it's London, you start seeing one candle doing 100 pips. One candle, 1 hour candle, right? Then GJ was really, really volatile compared to now. Now, people would rather trade GU than trade GJ. Then, the most volatile currency pair then was not even just GJ. GA was also volatile, but GJ had the best structure to trade,
Yeah,
right? One thing that even made me leave silver, I love how silver move was the pip calculation. It got too difficult to understand in terms of calculating it with the lot size and the actual pips, right? I don't know if you have actually traded silver. Have you ever traded silver?
I tried it once, but I said nah, I'm not doing it again, because I noticed that when I tried to do it, I was comparing it with gold and trying to use two of them as conference and all that, and that's just distracting. So I said, you know what, I'm just gonna stick with gold.
Okay,
I
I
didn't
don't
want
know
any
if you
distractions.
I don't know if you ever traded the other gold, because I've tried trading different gold. I've traded gold paired against euro. I've traded gold paired against pound.
Oh, that
I've traded gold paired against Aussie dollar. Have you ever tried those?
no, no, no.
Maybe
I don't
one day
think I don't
just you
think they will
just look at the
respond
price
correctly the
action,
way the dollar does.
and it's the same volatility actually. Funny enough, gold GBP is even more volatile than gold USD. I
Just
know, right?
yeah.
Gold GBP, that's gold paired against pound. It's more volatile than gold paired against dollar. It's literally the same thing, but the pricing is different. That's all. Like if you open it on the same time frame, you will see it. It looks exactly the same thing right now. right? But just the volatility is different. But anyways, I'm sure you guys who joined the space, you have listened to to Derrick rather, and he has given you the information you would need. So what I want you to do is the space is not so long. You can take time to play it again, write things down if you didn't in the first instance, and then learn from it. It's quite important you learn because learning is not just the only important thing you need to do. You need to learn and implement, right? If you learn and you don't implement, it's a waste of time. Okay. Thanks again to Rick Capital for taking our time to join the space. Hopefully, we'll have a group space in the future. And yeah, good night, everybody.
Good night, everybody.